Hello everyone. Now we are going to go into the second part of trend trading strategy, or what we can also call as value riding strategy. So I hope you all still remember the part 1. So today will be the part 2. So just to recap, value riding strategy or trend trading strategy is all about taking advantage of the retracements when the stocks actually move in the primary trend, and each time when it reverses back or takes a small retracement towards the moving average, when exactly can we go and buy that stock then? Okay, buy a stock as a new position or just to add on to existing position is up to what we want depending on the situation. Okay, or just to go and sell options. So I hope you all still remember that one of the biggest rules for value riding or trend trading strategy is for daily uptrend, for a day, if you want to trade in the daily chart, then the 20 exponential and 50 daily moving average must be above 100 and 200 daily moving average, and 20 exponential is above 50 weekly moving average in a weekly chart. Okay, so for a daily chart you use these rules. If you want to trade based on weekly chart, then you have to have these rules. We don't have 100 and 200 part for the weekly. Okay, so of course always remember we are talking about having a clear retracement. With this part is what we are talking about, so that's very, very important. So obviously, as I said, that in the value riding strategy we have two types. One is the touch and go pattern, which is this, and isolation pattern. Touch and go, of course, it retraces, touch the moving average and bounce back right away. But isolation pattern is the situation where it actually goes below the moving average for a very short period, probably a 1 or 2 days, or probably for 1 week, and then it starts moving higher back up above the moving average. Okay, so we have looked at the both these patterns. We have looked at the hammer, doji, and yin and yang. I hope you all still remember about that. So I'm just going to get the highlighter over here. All right. Okay, so this part is done, and I'm just going to change the color. All right, done. We have seen this rejection pattern. All right, hammer, then we have a confirmation, and then the same goes to this. We have a doji or a hammer, whichever way you want to say it. Okay, and then we have a bounce back. Okay, so these are the patterns that we really like, because you see it came down to the 50 weekly moving average, and then it bounced back and closed above both moving average 50 and 20. So that shows strength. Okay, so same goes to here, this yin and yang pattern. And now we're going to go into the next coming patterns. One is bullish engulfing, bullish piercing. All right, so obviously for a touch and go pattern, so this is the engulfing part. Okay, and for an isolated pattern, this is the engulfing part. So if you can see, pretty much all the patterns that I'm going to share with you all shortly, it's all about, if it's a single candle pattern like a hammer or a doji, it either touches the moving average or it's below the moving average, but the confirmation must close above the moving average. So this is the confirmation, this is the confirmation. So same goes to bullish piercing. So you have this pattern, so this is the piercing part. Okay, if you still remember the pattern bullish piercing, the same pattern doesn't touch any part of the moving average, and then we have a confirmation signal which closes above the moving average. Okay, so I guess it's kind of, I hope you all can get the idea behind this. Okay, pretty much once you have known the patterns, bullish engulfing, piercing, whatsoever, then you will be able to know whether it's a touch and go pattern or isolation pattern. So as example, this is an Intel. So if you could see over here, the stock came down. We have a clear retracement. I always tell you that's the biggest, most important factor. All the other rules are just as rule set for trading, but the whole concept, the whole idea behind value riding is to take advantage of a clear retracement. So we have a retracement. First, we have two here. This is also a confirmation because we have a candle touching the 50 daily moving average, this one, and then we have the confirmation over here, the green candle, which actually closes above the 50 days moving average. So that's number one. Number two, we also have the isolation pattern over here. The retracement continues. this candle goes below the 50 days moving average, and then we have a confirmation signal which closes well above both moving average. So this is kind of like gives in extra confidence. Okay, so we can take another example over here as well, another clear retracement. We have like an inverted hammer, or you want to say it's a doji, it's a hammer, doesn't matter, but it looks bullish, right? Bullish candlestick. And then we didn't have a, then we have our confirmation over here. Okay, so again, you will be able to write all these profits over here right now. So you could have sold, or you could have bought here, could have bought here, could have bought here, or alternatively, you could have sold an option here, first profit. You could have sold an option over here, second profit, and sold an option over here, a third profit. Another example, Caterpillar stock, bullish piercing pattern. So you could see this is the bullish piercing. Okay, and then we have the confirmation. So then we have this profit to run up. So again, if you stick to these rules, you will be just fine. Okay, so I'm going to share more of the other patterns. So you have bullish harami, you have the pivot momentum pattern. Okay, so of course this is the harami pattern over here, and this is for the isolation. And pivot momentum pattern is this part, obviously. Okay, this combination. Okay, or this combination. Okay, so remember pivot or pivot momentum pattern, they already have the confirmation built in as part of its pattern, so you don't have to have an extra confirmation pattern. Okay, so we're going to look at this bullish harami. Of course, this is the touch and go pattern. It touches the moving average and then starts moving higher. All right, so this is one of it, bullish harami. Another one is of course the pivot momentum pattern. You have over here this whole 3 candles. You have this whole 3 candles. Okay, pivot momentum pattern. So these are the patterns that you can take advantage when you want to add on to positions when the stocks are moving in the direction of the primary trend. Okay, for an example, I'm just going to draw it over here. You have the long-term value channel. Okay, and then stocks is moving down. You know the long-term value channel, the stock is moving higher, right? So as the stock starts rebounding and going higher, it doesn't just go up straight. You'll have all the rebound here. So each time the retracements that's taking place over here, here, this is where we use the value riding strategy or trend trading strategy in order to go and add to positions or to go and sell options to collect more profits. Okay, so again, more of example, this is the pivot momentum pattern. Okay, this is another pivot momentum pattern. This is, of course, this is very nice, you see, because it comes down and then you have 2 dojis. You see, the more number of dojis, the more number of hammers that you see, the more significant the trader psychology is. It shows more evidence that, oh yes, both are dojis, both are hammers. That means the buying sentiment is getting stronger. The buying sentiment is good. So that is why you have such dojis. So it shows added confirmation to the trades that we are looking at. And of course, another combination of pivot momentum pattern and rejection pattern. This whole thing is a pivot momentum pattern, but you could also see it as individually. What you could see it, instead of just seeing it as pivot momentum pattern, you could see this as a doji, okay, and this as our confirmation. Okay, so this is another way to see it, either as a combination or as a individual candles. So this is on a daily chart. Again, you can write this profits. All right, so again, remember, we need clear retracements. And of course, the last 2 patterns will be the double white soldier and the one-man hero. Okay, so one-man hero doesn't have any isolation pattern, okay, for obvious reasons, because one-man hero pattern should have few candles, which are, most of the candles should be above the moving average. I will show you an example shortly, okay, but remember, most of the candles should stay above the moving average, all these candles. And of course, double white soldier is pretty obvious, okay? So end of the day, your confirmation must be above. So this is where I said that one man hero pattern, you should have it moving diagonally, yes, but if you could see all the candles over here, all of them are above the moving average. Maybe if you have so many, okay, like just say you have about 12 to 13 candles over here, maybe one or two below the moving average, that's pretty much fine. But almost 80% of those candles should stay above the moving average. If it's a daily chart, then it should be above the 20 or above the 50 moving average. Then you have the confirmation because it closed well above all these candles. And of course, you must have volume. Remember, one man hero pattern always must be associated with volume. Yes, we didn't have a clear move up. We have a small retracements, and then we had the up. So this is another reason why when I set my cut loss, I don't set exactly at the lowest price. I give a buffer so that we will be able to withstand the whipsaw that will take place from day to day. Remember, when we're trading daily charts, there will be more whipsaws. And just to add on to further about what we have discussed so far about value riding strategy, you have touch and go pattern, you have got isolation pattern, and then you have all those trade entries patterns that I have already shared with you based on all the candlestick patterns. So the next part is, how do we identify trades that has higher probability? Okay, so in value riding strategy, you have various setups, right? So in these setups, which are the setups that like really have a good possibility of moving much higher or has a much higher probability of winning? So this is where these are the few exceptions. Higher than average volume is not a must, or volume anomaly is not a must. Okay, but it's good to have indication, as this gives a better conviction that insiders are into the move. Okay, so volume anomaly, average volume, higher than average volume is not a must, because when stocks are moving higher and higher and higher, okay, insiders have already bought way long ago. Okay, so when stocks are just moving higher, not often that you actually see it comes with a volume anomaly or higher than average volume. Okay, but if you have it, then that's an added positive element to that trade. So there's a higher probability of winning if there is a higher than average volume or volume anomaly in that value riding setup. Okay, in the case that 20 exponential and 50 exponential daily is below 100 and 200 daily, you can still trade, but you must use the weekly chart. Okay, provided the weekly uptrend condition is fulfilled. So what is the weekly uptrend condition? Is of course 20 exponential weekly moving average is above the 50 weekly moving average. Okay, so remember, if the daily uptrend condition is not fulfilled, don't use daily chart. Go to weekly chart, see if the weekly uptrend is still intact. If it is yes, then you can trade based on weekly chart. All the confirmation candle must also be based on weekly chart. Okay, warning, do not attempt to trade based on daily chart once the daily chart condition is not fulfilled. That means when the daily uptrend condition is not fulfilled, please do not use the daily chart to trade. Be patient, wait for the conditions to fulfill in the weekly chart. Remember, there will be a lot of opportunities. There's no need for us to go and rush and try to get into a trade. Never fall in love with any stock. Never fall in love with any trade. It's all about profit and loss. Okay, now apart from volume anomaly, if there is volume anomaly or higher than average volume, which gives an added advantage to that particular trade setup in value riding, other setups that adds to the winning probability in a value riding strategy is these elements, which is first, double bottom at moving average. Double bottom at moving average, let me tell you all, is one of the best setup, especially if you want to buy a stock, you want to add to positions, or you want to add a new, you want to add more to your existing position. It is one of the best setup in trend trading, as the probability of winning is much higher. And I will show you an example shortly what I mean by double bottom at moving average. Now, Apart from that, price rebounds after touching both moving average with higher than average volume. This is what I've mentioned here earlier, okay? So the price retraces, touches the moving average and rebounds with higher than average volume. Definitely a much better setup in order for us to trade. As I have mentioned, when higher than average volume, that means the insiders are into that particular trade. And price volume anomaly at the moving average, which I have already mentioned again as well. So remember, some of the setups which has really good advantage is when you have double bottom, you have higher than average volume, and you have volume anomaly. Apart from this, another setups that kind of have a good advantage is when it is a doji or a hammer pattern. Okay, the candle that touches the moving average. Okay, the candle that touches the moving average, if it is a hammer or a doji, it has much higher probability. Okay, so that's about it. So you have all those value riding patterns, you have the touch and go and isolations, you have all those setups which gives a higher probability to a value riding strategy. This is an example of a double bottom at moving average. Okay, price retrace to the 50 daily moving average, tries to rebound, comes back, okay, comes back, and then it basically rebounds from the same level where it rebounded earlier. So it rebound here, it rebound here, then you have this. So this kind of double bottom is exceptionally good setups to actually trade it. Okay, so if you have taken a position here, then you can add a position here. But if you have not taken a position here, you can go and add more positions here. Okay, so it's all depends on the situation, but double bottom and moving average either 20 or 50, it's really good. This is another one. If you could see over here, this is again a nice clear retracement on the weekly chart. Again, as I mentioned, doji or a hammer, nice doji, and then the same thing happens again, another hammer, and then rebound. So it takes place at the same level, close to the moving average, close to the moving average. This is exactly what we want. Okay, so these are the setups that allows us to be more profitable in the stock market. Remember, it's not that every single pattern we want to go and trade. Look for those patterns with higher probability. Then it adds confidence to our trade. Of course, at the same time, if you take trades with higher probability, your probability of losing will also reduce. That's what we want as a trader in the stock market, to reduce our probability of losing as much as possible. Of course, this is where you use volume anomaly. Again, as I have mentioned again and again, if there's volume anomaly in the value riding strategy, that's really a big goal for me. Okay, so over here you have a huge candle with higher than average volume. Then you have a much smaller candle, but this time with a much higher volume. And finally, it's ended up with a hammer. So first you have a huge bearish candle, then you have your stopping candle over here, second stopping candle, and then you have a confirmation. We have this profit to ride. Okay, so this is where you have a clear idea on when to go and add on positions, when to go and sell options when a stock is moving higher. Okay, so this is rejection pattern with clear volume price anomaly, reducing size of candle's body despite increasing volume. Failure of effort versus result theory. Remember, as I've always mentioned, if the effort is huge, that means the volume is huge, you should have an equivalent result. That means big bearish candle or big bullish candle. If the anything otherwise, that is the anomaly. That's where we have to start investigating. Okay, that's where we as MVP traders, we are interested in such anomaly. Okay, so that's basically what I wanted to share with you all about value riding strategy. You have seen all those setups, and we are going to have all these setups filtered for you in the MVP screener. That's the good news. You don't have to go and look at each and every single stock. This is already coded. This is already programmed in the MVP screener. You will be able to just take a click and then look at those setups for you to go and trade. Okay, so thank you very much, and I will see you all in the next video. Remember, if you have forgotten about the part 1, do look at it, do watch it again, and then come back and watch this again. So this completes our 3 strategy, which is the value anomaly, and then you have the value breakout, and this is value riding strategy. Okay, so thank you very much, and I will see you all in the next coming video.